Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
Very good evening, ladies and gentlemen, and welcome to the Smartkarma Forum. The forum is meant to be a high-impact weekly live webinar exclusive for Smartkarma Plus subscribers. We discuss the best, highest conviction insights surfaced across the network. The forum is meant purely for informational purposes and is not investment advice. It is the opinion not of Smartkarma, but that of our insight providers, and Chatham House rule applies. Every week, we try and look at a small and mid-cap idea, a large cap idea, and oftentimes also a core conviction theme. At the end of the week, we make video recordings of the forum and share them on our YouTube channel. This is to make sure that you can not only revisit old forums, but you can also share these with your friends and watch them at your own time and pace. This week, we will look at these 3 ideas. We will start off by looking at Nikon in Japan, then move on to Fushan Energy in Hong Kong, and finally, we will look at Michael Howell's piece on the second leg down of the bear market. Let's begin by studying Nikon. The ticker is 7731JP. This is a $3.7 billion market cap company. It trades $23 million a day, so it's very actionable. And this is an insight written by Mark Chadwick, who covers Japanese small and mid caps on Smartkarma. Few things first, Nikon manufactures and sells cameras, lenses, and other semicon related equipment. A few years ago, they acquired SLM Solutions, a German 3D printing firm. We are very positive on the growth of the 3D printing market, and we think that industrial applications will require accurate products and rapid time to market. SLM is a leader in metal additive industry with decades of experience, and its latest product seems to be a game changer. Nikon has done well year to date, but the stock is still trading below book value, which represents opportunity for longer term investors. Moving on to Shougang Fushan, the ticker for this is 639 Hong Kong. The market cap is $1.6 billion, and it trades about $2.5 million a day. Few things first, what does Shougang do? It mines, produces, and sells coking coal. As you can see from the chart on the right-hand side in the teal line, this is a company where the share price has done quite well over the last few years, but since the start of this year, the share price has pulled back somewhat. Where it stands today, this company is at really interesting levels, trading on about 4.5 times PE, just over 1 times EV/EBITDA, and a whopping dividend yield of 17%. More than 50% of its market cap is net cash, making it have an excellent margin of safety. Fushan had a very strong first half 2022 on the back of very high coking coal prices. If coking coal prices continue to correct down to 17 to 1800 RMB levels, the stock would still be trading north of 10% dividend yield. Finally, we will look at Michael Howell and his insight on the second leg down in this bear market. Few things to note. Michael Howell is a liquidity strategist, and he focuses on how changes in liquidity conditions impact markets and asset performance. Based on his analysis, he feels that the S&P is likely to test 3,200, maybe even 3,000 levels as corporate earnings get crushed. This looks like the classic second leg down in bear markets. Just to recap, it was tight central bank liquidity that drove bond yields higher and term premium to collapse to near all-time lows. Every time term premium falls, it has led to much weaker reported corporate earnings, roughly 12 to 15 months later. You can start to see that from the chart on the right-hand side. The black line is the US term premium, while the orange line is US corporate earnings per share. Based on this analysis, S&P 500's earnings could skid by at least 20% in 2023. And that is what the market will discount in the second leg down. For all this and more, continue the conversation on the Smartkarma platform. Thank you for joining us today and hope to see you next week.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.